Tesla is down over 10% since their Q3 earnings earlier this week. Let's take a closer look at the fundamentals and technicals to see where the stock may head from here. Tesla missed on the top and bottom line, and the key metric of margins have been on the decline due to Elon's strategy of lowering prices in an attempt to boost deliveries and gain market share. Now, they have been making investments in full self-driving and artificial intelligence, which puts pressure on operating income, sacrificing short-term performance for long-term gain. Tesla came in below consensus expectations for deliveries, but they attribute this to planned factory shutdowns. Now, Elon blamed rising interest rates, saying that higher financing costs boost monthly payments, making it harder for people to buy a car. He didn't give a clear indication if price cuts have ended or any gross margin outlook. Now, Tesla is pursuing an FSD licensing deal with OEMs. The Cybertruck delivery event is on November 30th, and they will begin to advertise, which is something they have never done in the past. As I mentioned in my previous video, which you can watch here, I warned that Tesla may be in for a decline given the technicals, and a test of the 200-day may be likely. So we closed slightly below the 200-day moving average, and to my eye, it appears we have broken the current bullish trend since the start of the year. Now, this doesn't mean game over for Tesla, but rather that we may be in for a period of consolidation as the market digests Q3 earnings and the current macro environment. Taking a look at some key levels, 205 is an important swing level as it also coincides with the 200-week moving average. Now, if that area doesn't hold, the next areas of support are at 180 and around 150. Looking at the fib retracement of this entire move since the Jan low, we haven't traded down to the golden zone, which is where I generally like to buy pullbacks. And if we did, we would trade down to that 180 level. Now, in the previous two moves up, Tesla has retraced each time to the golden zone before bouncing, so I feel we can't completely rule this out. I made a video where I go in depth about this, which you can watch here. The market is being pushed around by the breakout in yields, notably the 10-year bond, and if yields keep going higher, stocks are going lower. It's that simple. Now, it's up for you to decide how you want to play this. I'm currently a long-term investor in Tesla and hold shares in a few accounts. I do believe that the short-term pain around price cuts and margins, investments in FSD, and current macro trends will subside, leading the stock to perform well in the longer term. I'll be keeping an eye on the 200 and 180 levels for areas of support and looking to increase my position at those levels.